Good morning, and thanks so much for tuning in to this trade setup on BloombergQuint. I'm Mathew. As of now, the signs are pointing to a muted start for the Indian markets, but we'll get to that in just a short while. Let's set the context before we do. The big talking point from overnight has to be the last meeting of the Federal Reserve of the year 2020. And as expected, the rates have stayed where they were. They've stayed pat, but the US Fed has actually basically come out and said that it's going to keep buying till it sees, in its words, substantial further progress in employment and inflation. In terms of the numbers, the Fed has committed to monthly bond purchases of at least $120 billion. And they've also scrapped their previous pledge to keep buying over the coming months. So it's seen as broadly positive as of now, saying that, yes, the Fed will continue to stimulate the economy till it sees signs of a recovery. There was an expectation that an announcement would be made to change the composition of the bonds that the Fed has been buying, that they would move to the longer end of the spectrum to sort of anchor the yields on the longer end of the spectrum, but that did not happen. So after the announcement, you actually had the yield on the 10-year Treasury spike and then cool off just a little bit while Federal Reserve Chair Jerome Powell was speaking. There was also no clear definition of what the inflation and unemployment rates would need to be, or what levels would need to be hit to trigger a change in the bond buying program of the Fed. So that's some bit of uncertainty that could weigh on the markets in the near term. The Fed has revised its GDP projection for 2020 to a 2.4% contraction, as compared with the earlier estimate of a 3.7% contraction. So that's better than expected. And the US GDP is seen growing by 4.2% in 2021. And that's, of course, on the low base of 2020. Unemployment is seen as at 5% in 2021 and 4.2% in 2022. But the Fed chair has admitted that because of the ongoing second wave of the pandemic in the US, the next few months look a little challenging. And inflation has been pegged at 1.8% in 2021, and that's slightly higher than the previous estimate of 1.7% and 1.9% in 2022. So all told, it was positive, but well, the dollar index did decline just a bit. It has been weak in the past months. In fact, for the year, losses of over 6% for the dollar index as a whole. And US equities ended somewhat mixed. You had the Dow decline by less than 0.2%, and the other two benchmarks gained ground just a bit. But it's a bit of a mixed bag. And as of now, indices futures are pointing to just a small bit of gains going into trade later today. The Asia Pacific markets, well, I think that most of them have started a bit muted. Of course, you have a few green ticks, but a lot of them are trading just about flat or marginally negative. Perhaps we can pull some of those up onto the screen and show you where they are trading right now. But several of the markets that I saw maybe about 10-15 minutes back were trading slightly muted in trade at the start. There you have it, the Hong Kong Stock Exchange currently trading just about flat, and you have the Kospi that's trading with marginal cuts as of now. Let's talk about the SGX Nifty then. Let's pull it up, and it's been a bit of a mixed bag as to what the indicators have been going into trade. Of course, it's gained some ground since I saw it last. It was about 0.3% lower, and now it's currently trading about 0.1% lower, indicating just a bit of a muted start. But we've been wrong on that count in the past. In fact, in yesterday's session, you have a significant amount of strength that was shown. Let's take a look at what happened yesterday. The benchmarks closed strong, led by gains across the board. In fact, you have a few financials that dominated. HDFC Bank was the top gainer, but you also saw a healthy mix of sectors making gains. And there were just 13 losers on the Nifty, but those losses were capped. And as a result of which, you have the Nifty 50 that gained about 0.9%. But what's interesting for me is that the broader markets are continuing to outperform. The Nifty Midcap 100 gained about 1.6%. But what's contributing to that? It'll be interesting to see whether the FII money is going into these stocks as well, because those flows continue to remain strong. In yesterday's session, you had FIIs buy as much as 1,982 crore, and DIIs continue to sell 1,718 odd crore. For the first half of the month, FIIs have so far net bought equity worth 33,657 or 58 crore, and DIIs have sold about 24,700 or thereabouts. So if the buying continues at this pace, we could well see a number that's close to what was seen in November. And that's positive, of course, for the Indian markets. In terms of stocks to watch, I would watch out for Jubilant FoodWorks. Not the biggest announcement, but it indicates a change in strategy. The company has come out and said that it's launched a new brand called Ekdam, which is going to be focusing on biryani. So perhaps an indicator that the company wants to go more Indian in its offerings. Dunkin' Donuts, perhaps not the success that the company hoped it would be. But apart from Domino's, it's looking to build out its array of offerings in the segment. We'll have to see how Jubilant reacts to that update. I would also watch out for the Nifty Realty, because it was clearly the outperformer in yesterday's session. And in fact, you have significant gains over the past month. You have nearly 25%. That is gained for the Nifty Realty as a whole. For India Bulls, I saw significant delivery buying as well. So that's a positive sign, but we'll have to see if some of those gains get capped or perhaps some money gets taken off the table over the next couple of sessions. Now, out of context, I would actually say that it's the mood is ripe for risk assets across the globe, and perhaps that's one indication as to why the Bitcoin surged past the $20,000 per Bitcoin mark yesterday. In fact, it's trading not too far away from the $21,900 mark. It's run up very significantly. But will that party continue? Remember, in 2017, you saw a crash in the Bitcoin. In fact, just around this time of year, you had the Bitcoin scaling all-time highs, but then just 4 or 5 days later, you had it trading below the $11,000 mark once again. Let's see if this time around, those gains are sustained. Do stay with us. We'll bring you all the updates as and when the markets start. And over the course of the day, you'll find all of that on the website, BloombergQuint.com.